We're starting to see folks trickle in. We'll get started around 12:02 just to respect everybody's time, but or it's 3:02, depending on where you're at in the country. So give it a couple minutes and just be comfortable. I put a poll in the chat. If you could go ahead and fill that out, if you have a second or two, that would be great.
Michael, it looks like we got a response that they're not seeing the poll, and I'm wondering if it was populated before folks entered.
Well, let's try that again. Probably be better anyway.
So they're saying maybe it was muted, so it could be the settings of the meeting or artwork settings. Oh, maybe it's there.
Should be in there now. If we're not seeing it, let me know. Going to give it one more minute, folks, and then we'll start going. If we're still not seeing the poll, let me know. I'm seeing some responses come through. We can always repost it. We're not quite there yet. Great. It looks like folks are. Yeah, if you click on the polls tab up at the top of the screen, if it's not showing up in your chat, the top of the screen, you should have a little icon that says polls. Thank you, Kristen. Yep, that's where you'll see it. If not, I can pop it into the chat again later. We'll want to make sure that everybody gets a chance to share some information about their credit union or where they're at. Awesome. Okay, I'm going to go ahead and get started. We're at 3:02, so we'll go ahead and jump into this. This webinar will be recorded. I'll get to that in a minute, but happy Wednesday, everyone. Welcome to our webinar on growing your credit union with a strategic field of membership. My name is Michael Murdoch with the marketing department over here at CU Collaborate. I'm excited to moderate today. A couple of notes to best set the table. Everyone beyond the event organizers are muted, so if you have questions or comments, we highly encourage you to put those in the chat. We may get to those during the webinar, but we'll do our best to get throughout the webinar. But either way, we've made time at the end for a Q&A. So if you have a specific question or something comes up during, or a thought or otherwise, please share in the chat. You have the ability to do that. As I mentioned, the recording and the slides are going to be sent to anybody who registered, so keep an eye out on your email inbox, likely tomorrow. I'm going to try to get those out sooner than later. We'll make them available on our website as well. Next, I want to be sure and mention a few of the services we offer, which include charter and field of membership consulting, branch strategy, low income designation, attainment and retainment, community development, financial institution certification, mergers, marketing and branding support. There's a lot more, but if any of these are a buzzword or buzzwords during your strategic planning sessions, please check out the meeting link, which is on this slide. I'm going to pop that into the chat as well. Click on that to find time with us to discuss. Also, if you're planning on attending the GAC, supposed to be a record year this year, this is just around the corner, be sure and stop by. We will be there at booth 617. We love meeting folks face to face. Next, as you can see here, just a few statistics we wanted to pop out there that truly highlight how and why CU Collaborate stands out in charter and field of membership consulting, including 100% success rate and the largest field of membership expansions completed to date, that's huge. Next and finally, because I've been talking long enough, it's time to introduce to you our expert panelists. Chris Tissue is our COO and head of consulting. He established CU Collaborate's consulting practice, as in field of membership and regulatory optimization, using software as an enabler for innovation. 16 plus years of experience in consulting with a focus on data analytics, performance, and financial management. Chris has been around helping clients in mature analytical capabilities to inform strategic business decisions at Grant Thornton, Deloitte, and Callahan and Associates. Next, we have Emily Hughes, our Advisory Director of Growth Initiatives. Emily oversees 100 plus mergers, charter conversions, and FOM expansion requests annually. So prior to joining CU Collaborate, Emily built managerial cost accounting models and oversaw increasing adoption of data modeling to improve transparency and business processes in federal budgeting. So without further ado, I'm going to hand it over to Chris. But as I mentioned, please put your questions in the chat and keep an eye out for other links that we share throughout the webinar. Chris, it's all yours.
Awesome. Thank you so much, Michael, for facilitating and for the introduction. Welcome, everybody. We are super grateful for your time and attention. And we know everybody is really busy. So it means a lot that you would choose time to spend here today with us to talk about something that we are very passionate about. As Michael mentioned, we are champions of credit union growth, and as a function of that mission and focus, see field of membership as a very critical area to pay attention to, and we're interested to see kind of where you all are on the spectrum of field of membership, whether you're actively sort of exploring whether your field of membership can help you attain your strategic goals and initiatives. You're totally unsure what's even out there or possible for your credit union, or somewhere in between, maybe just doing a little bit of research. So we'll start with that agenda item at the very top of the hour. And then at the end, we'll be talking a little bit more about how if you're kind of set with your field of membership or getting prepared to adjust it, how you can mitigate or sort of mitigate the risk that field of membership may present in your marketing efforts, particularly those around online applications, as folks, increasingly we see the consumers, especially those younger demographics, prefer digital methods and reduce any, consumer confusion around eligibility and field of membership. So starting with the field of membership and what's out there, we always like to bring this slide up. It's helpful for us. It looks, for those of you that may serve in the business development or marketing function of your credit union, this is your traditional business development or sales funnel. We think it's really helpful to frame why field of membership is important, because no financial institution out there will achieve 100% market penetration. Your average community chartered credit union has a 1.5% market penetration, to give you a bit of a benchmark. And similarly, not all of your products and services are tailored to your entire field of membership. So it's important to think about whether your field of membership, which effectively serves as your total addressable market, is really large enough to achieve the objectives that you set out in your strategic planning process. I know many of you or a lot of credit unions, our member credit unions, will undertake the strategic planning process largely at the end of the year, around Q3, Q4, some in Q1. And so what we would encourage you to do is not just think about what goals and initiatives you have, but whether your field of membership can support those goals and initiatives to make sure that they are realistic. Speaking of those goals and initiatives, wanted to talk about and provide some examples that we have heard from our member credit unions. Here's some that, just the team and brainstorming, some of the reasons people will seek out field of membership as a function of their strategic planning process. Obviously, Liquidity has become tighter, and so we've had more and more conversations recently around seeking out deposit growth, member growth being a function of that. You may be looking at increasing your physical infrastructure, which might have certain geographical ramifications around whether you need to grow a community charter. We do a fair bit of work, as Michael mentioned, in the regulatory designation area around low income designation or LID or CDFI. So if those regulatory programs are a goal of yours, they may mean certain things for whether your field of membership requires a bit of an update or a change or charter change. We also have particularly if you're a single common bond or a smaller credit union or hyper regionally focused, you may feel that you have a risk that you need to mitigate as a function of your membership. Maybe if you have a large employer group that is on hard times and you want to mitigate the risk of being overexposed to that group, you may be looking at a field of membership change. And then finally, we get a lot of folks come to us just because they feel like they're turning people away. Good would-be members are finding their way into your branches or your online sites, and you may just see that otherwise great potential members are just simply not able to join your credit union because your rules may be too restrictive. So just a few examples to sort of get you thinking. I would encourage you to post in the chat if you have specific strategic initiatives, and we can hopefully provide some high-level guidance around what field of membership options might be good or considerations to help you achieve those goals and initiatives. One other thing that we think is really helpful, and we work with a lot of our member credit unions on, is once you have your strategic goal and initiative, helping to translate that into actionable a potential actionable field of membership or charter change, and just wanted to provide a couple examples of how you could go about doing that. So this is one example. This is actually this is a screenshot from CU Collaborate's Analyze CU dashboard, which allows a credit union to upload your Aries share file and do some analysis on your current membership and then your potential membership or your geographies. So this is just an example of taking a strategic goal or initiative. This credit union was looking to essentially they had over-penetrated their existing community charter, but weren't really sure where they should go geographically. And so analyzing their current membership base, they could see that they had really good representation in rural areas. They were actually on the outskirts of a statistical area, so they could go into a metropolitan area, or they could choose to go sort of like further out into lower populated or population dense areas. And so interestingly, they found that they had a higher than sort of average penetration rate in rural representation, which may indicate a strength and maybe a focus area. But similarly, they were underrepresented in some of the economically distressed areas, which may highlight a product or service gap, or that they could fill an unmet need in their existing market. And then kind of similarly across the bottom here, they looked at the distribution of the household income in their current market and potential market, just to see where they were either on par with that distribution or under or overrepresented. And so hopefully this is just an example of taking a general strategic goal of increasing their market and then providing a little bit of insights as to where to look in their potential field of membership growth areas to see opportunity or development areas, candidly, for the credit union. Slightly different example. This is a screenshot from our Expand CU software, which highlights the regulatory relief initiative. So we have some credit unions who are seeking for a low-income designation. One benefit of a low-income designation is the ability to accept non-member deposits or apply for secondary capital, which can align with your growth goals and initiatives. This map, while it's busy, if you zoom into a market, you would be able to see if regulatory relief is also one of your goals or initiatives. Having analytical insights as to what portions of the area or geography in which you operate are low income qualifying and may help you work towards that designation can also be very helpful as well. So again, the takeaway here is obviously sort of like looking at your strategic goals and initiatives and seeing if you have enough room to grow. And if you don't, or you feel like there's opportunity out there, turning that goal into insights and sort of an action plan for what type of field of membership and charter options might best suit those. With that, I'm going to turn it over to Emily, and she's going to walk us through what options we have as America's credit unions for chartering.
Awesome. Thanks for passing the mic. And everyone, I'm so excited to be chatting with you today. So thanks for joining us. Credit unions are regulated either at the federal or the state level. And this regulation specifies how your field of membership actually looks. With state charters, there's quite a bit of variability, with some state charters offering more flexibility than the federal charter. But just given that flexibility, we're going to focus today on the federal charter types. And on the next slide, the three charter types are single common bond, community, and multiple common bond. And as we go through each of these, we're just going to talk a little bit about a broad strategic initiative that might be best supported by each of these charter types. So on the next slide, the federal single common bond charter type, typically this is where a credit union is partnering with a single employer or a single association. And in assessing your credit union's strengths, you might come to understand that you have tailored amazing products and services in support of a single occupational sponsor. So an example of this might be you're just killing it at serving firefighters in your given municipality. In this circumstance, actually taking advantage of the TIP charter, the trade, industry, or profession charter, might be a really good fit, making the single common bond a good choice for your credit union. And this would allow you to take that expertise you have developed supporting your single municipal firefighters and expanding that to the county, region, or state level.
The next, thank you, Emily. The next charter type is federal community charter type. This is really your geographical boundary based charter type. So the affinity clause that's outlined here is individuals that live, work, worship, study. There can be a number of iterations on that, but the way that these people are eligible to join credit unions with the federal community charter is because of their affiliation with the locality or the geography. There are two predominant types of federal, what we call presumptive communities. The first is for those of you that are in sort of metropolitan areas, this would be a well-defined local community. It's generally a contiguous portion of a statistical area with a population of under 2.5 million. For those of you that are operating in more rural portions of the country, there is a rural district, which is a population of under 1 million and under 100 people per square mile. So the great thing about federal community charters or community charter rules in general, if you're a state charter and you still have community rules, is they're normally based on counties, and that is in the world of field of membership easy to communicate. People likely understand or are able to self-certify whether they live in a geography or work in a county, or whether they have a family member in a county. So that is a huge benefit to the community charter rule. The downside of the community charter is that it's really specific to every credit union is different. Every area and geography is very different. And some institutions will find that they may border a statistical area that doesn't really give them a great option for either the rural district or a portion of a statistical area. Or in some instances, you may be in a small statistical area and outgrow it. And so you will find at certain asset thresholds, depending on the size of your credit union and the size of the geography and population limits that you work within, you may have a limited potential field of membership. Just some examples. Again, these are sort of broad brushstrokes. Schedule a call with us to talk more specifically about your credit union and the area you operate in. But if you have branching plans, or again, you're sort of turning people away that are just coming over the county line and they don't necessarily have that connection, a geographical expansion may make a lot of sense. You may want to continue to focus on the community rules and just continue to add contiguous portions around your existing field of membership. Or if you're serving firefighters really great and you want to serve their families or have them refer people, it may make sense to convert to a community charter just to pull more diverse groups of members from your community into your field of membership. The final charter type or field of membership type within the federal charter, is the federal multiple common bond charter. This is really many single common bonds. And so similar to the single common bond, you can just, instead of serving just one employee or occupational group or associational group, you can serve many. So the way that these organizations have traditionally grown is through what's called SEG development, or select employer group development, where your marketing and business development efforts, your field of membership growth is really focused on aligning yourself with those organizations. Oftentimes, if you're working with an employer group, you are pitching the benefit of being an employee with that organization, is being able to also join the credit union, and you can align with them on community events. One other additional benefit is if you have associational groups in your organization, that can give you a broader reach depending on the size of the association, if you're not focused on employer groups. And then finally, interestingly, multiple common bond credit unions are the only federal charter that can add underserved areas, which are actually community rules. So in certain parts of the country, ironically, underserved areas, you can draw larger community rules than would otherwise be attainable through the community charter. It really depends on the market, but you can have a diversity. You can still have a community element and focus on serving the underserved while serving employer groups as well. So this charter type again provides the largest potential field of membership if community charters are becoming slightly restrictive for your strategic goals and initiative. They also, M&A, big topic in the industry, a lot of mergers and acquisitions happening right now. This is the most flexible field of membership type at the federal level for M&A and mergers and acquisitions. That can sometimes create an additional step to align field of membership before merging with another credit union. So this is the most flexible charter from that perspective. The downside, and we're going to talk about this a little bit later in the presentation, is that it is more difficult to communicate because of the sheer number and diversity of rules that these credit unions typically have in their charter. It can be difficult to communicate to the end consumer all the different ways that they might be eligible to join your credit union. And in the world of everyone wanting Amazon easy, that can be super challenging. So just, to summarize things for a strategic alignment example, again, if underserved areas offer you geographic opportunities that a community charter wouldn't, if you feel like you're outgrowing your existing community charter and you've reached the 1 million or 2.5 million population for the potential field of membership, we see a lot of credit unions considering the multiple common bond charter as a way to achieve their strategic goals and initiatives. Emily, I'll kick it back to you. Thank you.
So this graphic shows credit union charter types by asset size, and it's kind of a helpful landscape analysis. So starting on the left, credit unions with the smallest asset sizes. So this is credit unions with fewer than 25 million in assets. The most common charter type we see among these institutions is that federal single common bond, and that's just illustrated with the orange band. As credit unions grow, the federal community charter type becomes more popular, and that's illustrated by the royal purple bar at the bottom. And you can see it kind of like step up until you reach the asset size of 100 to 500 million. Once credit unions hit that threshold, we see that state charters and the multiple common bond charter type become much more common. And this speaks to, Chris talked about kind of like the additional flexibility that a multiple common bond charter type can provide your institution. And then with the state charters, we also see in these larger asset sizes, this is credit unions that are taking advantage of state regulation that allows them to serve, that's more flexible and allows them to serve communities much larger than what federal regulation allows. So gives you kind of a sense for what credit union peers in your asset size, the types of charters that they're taking advantage of. And on the next slide, we're going to touch on marketing. So marketing is really integral to growing your membership. And the thing that we see our members grapple with quite frequently is the efficiency with which they can reach their entire field of membership. So there's really a line here to be drawn between reaching everyone in your FOM, but maybe not wasting resources, getting your messaging to folks who wouldn't be able to qualify. And this is highly specific to your market. It's specific to the technicalities of your field of membership and what's resonating in your community. But the takeaway here, or what we're suggesting you maybe grapple with or consider, is the efficiency of different marketing mediums in reaching your potential members. And just a couple of examples here to bring this to life. If you're using radio or television, is that broadcast range of the stations you've selected, is it too small? Is it too big? And in placing billboards, maybe don't place a billboard where you're getting a lot of interstate traffic and reaching drivers that maybe aren't eligible to join your credit union. And in contrast, consider the ability to hyper-focus using digital and even direct mail marketing, where you can tailor your outreach not only on demographics, but also on geography. So on our next slide, we're going to introduce talking through online memberization applications. So on our next slide, CUNA did some research finding that 40% of consumers actually don't believe that they can join a credit union. And on the next slide, we see that consumers on average are completing bank applications almost twice as often as credit union applications. And the place where people really get confused and drop off of credit union applications and they walk away from them is when they're confronted with eligibility questions. And our next slide shows an example of just how overwhelming this can be for a consumer. So you can see here in this application, it's directing a consumer, a potential member, to self-select the eligibility rule that they comply with. And it's just across like all of these options: occupation, live, work, worship, association, etc. And in contrast, we have some best practice recommendations for making this like a little bit easier. Our first recommendation is to avoid kind of like throwing up all of your detailed field of membership rules because it is such a barrier for consumers. And we really recommend like putting the Join Us button front and center and inviting people to begin your membership application process. And of course, when they begin that process, we want it to look as simple as possible for them. So many of our members actually have found that software can really help them make this process a little bit more user-friendly. And one of the things that software can do is customize the experience for the potential member by wrapping up the application as soon as eligibility is defined. So once the consumer has answered the eligibility question affirmatively, then they're kind of sent right along and they don't have to go through all of the other rules. Additionally, another thing we recommend is putting the question of eligibility further down in the membership application process and beginning with collecting contact information and product and service fit information. There's two reasons for this. One is if you can get people to buy in by answering the easy questions, they're more likely to finish the process. And in the event that they ultimately don't, you'll have some good information that your member services team can use to follow up with them. And then finally, when ordering your questions on eligibility, we really recommend figuring out or honing in on the rule that's going to make most people eligible and put that question first because it's going to shorten the application for more people.
Thank you, Emily. We do also get a lot of questions around specifically association-specific considerations, and so we wanted to add these. I think even Emily Wada in the chat just posted a good question around Chamber of Commerce. So I'll get to that in a second, Emily, but quickly for those of you that do have association field of memberships or multiple Kanban or state charters where you have an association or multiple local associations where members of that association can join your credit union. Just some specific considerations here. First is that potential members have to opt into the association. So if you're working with, let's say, like a local Chamber of Commerce, for example, there needs to be some process where the member, certifies that they are a member of the Chamber of Commerce and that they're able to join your credit union. If you're working very closely with the association in your field of membership and you're sort of going to market in partnership with them, hoping to position the path of the association as a benefit to membership in the same way that you would with an employer group traditionally can be very helpful, and just making sure that you phrase that to eliminate confusion on behalf of the would-be or potential member. And then sort of like to put it another way, what as we've been emphasizing sort of like ease and capturing important information. One thing that we've seen can be challenging or sort of create a lot of unnecessary friction in the new member acquisition workflow is not sending them to the Chamber of Commerce to sign up, hopefully finding some way to keep them in your online application process as long as possible. Or at the very least, if you've got to do that, again, sort of going back to what Emily had mentioned before around making sure you capture some information just in the event that if they never come back, you can always reach out to them and hopefully recapture that potentially lost business there. So again, just for those of you that do, do have an association, some specific recommendations there. Yeah, I'll turn it back to you, Emily. Yeah.
Great. I will say what's next. If anything that we've talked about today is sparking questions for you, we would love to connect and talk more. So definitely please reach out and we can tailor some of these concepts around your specific credit union and market. And then also go back to your teams and reflect on the extent to which field of membership is supporting your strategic goals or potentially is a barrier. And where there are those gaps, thinking through what field of membership changes need to be made, and if that's a conversion or an expansion. Next, again, we recommend with both your current field of membership and if you have an updated field of membership in the future, make sure that you're thinking through your online and in-person memberization workflow. So same concepts kind of apply in person as online so that the process is streamlined and as user-friendly as possible. And then finally, you might not be considering field of membership changes every year, but if it's on a 3-year or a 5-year horizon, just continuing to assess market penetration and the extent to which your credit union actually has room to grow membership.
Thank you so much, Chris and Emily. We've got plenty of time for questions. I did see a couple in the chat that we didn't get to, so I'll go through those. But first one is, do you have recommendations on how we could track income and race for new members to help with CDFI certification?
Oh, that is a fantastic question. And one I wish we had Jason and our CDFI focused people on, because yeah, we just did
I can jump in on this.
Oh, thank you, Sam.
Yeah. So income generally captured in the loan application. So if there are questions about income, I'm gonna kind of see, I would say in the loan application, you get income. For tracking race, the new approval methodologies, the one that is like really scalable is basically the HMDA methodology for the African American target market and the Hispanic target market, which yeah, it'll match the HMDA methodologies for those target markets. Essentially, for all the other target markets, it's primary data collection. We do have analytics that assigns the probability. It's a Bayesian improved first name, surname, geospatial model. We also support the fair lending, the CFPB's fair lending model, but will essentially predict the likelihood that someone is of different races, someone speaks a different language at home, a number of different things. But then our guidance would basically be like, then go to those people who have higher chances of that and do essentially survey them. You're going to need to get self-reported information in almost every other case except for Hispanic and African American mortgage lending. Unfortunately, we lobbied for them to accept the Bayesian improved first name, surname, geospatial model, but they did not do that in the pre-approved methodologies initially.
Thank you, Sam. That was very helpful and a good answer. I think we had a follow-up question from that same user. What about for new members who haven't applied for loans?
So you could do something like getting income verification from a fintech as part of the application. It's going to increase the cost of the application. We can do something similar to like the race modeling, where we can model the members' income and then do primary data collection, but they no longer are accepting, and this is why they're not doing the Bayesian improved model either, but like geospatial based modeling for anything. So like in the previous certification process, you could essentially use the block groups from the NCUA's LID workbook to say if someone was low income, but they're no longer accepting that methodology anymore. So you need to do primary data collection. I will also just say though, the CDFI is based on lending activity predominantly. So you're only really going to be counting the members who have applied for loans. But if you're trying to do target marketing, we also have a API that can tell you which of your members would count for different target marketing, like for investment areas, low income target population, and again for OTP, we have the probabilities there too, so we can tell you which of your members likely fall within those things. But then basically you're going to be gathering the data from them in the loan applications.
Awesome. Thank you, Sam. Gary had a question from earlier. I think we were on slide 10 when we were sharing the report. Says this report would be very helpful for credit unions. What's the cost and turnaround time for the report?
Gary, it's part of your software.
Yeah, Gary, you're in luck.
You
It's
have
free
it.
to you.
You've already paid.
So yeah, reach out. We can I think we could probably get you this
I think we could just
within
send
a
it to
day or
you.
two,
Yeah.
as long as, and I know we've uploaded, I just don't know how recent your upload is, so that might be the caveat there, but we can connect with you offline on that. And yeah, for those that might be interested in this type of analytics, we do asset-based pricing to make sure that our solutions are affordable to the wide range of sizes of credit unions. So it just kind of depends on your credit union.
I will also bring up that you can pull this up within the software. You can pull this up within any community too. So for like GAC, you can pull up your impact metrics for any congressional district. So, we are trying as best we can to help defend, or I guess advocate for credit unions' interests, and equip you with data to basically show members of Congress why they should care about, credit unions generally, but also your credit union specifically and the impact you have on their constituents. The part that's cut off on this that I think is personally most powerful is we calculate a risk-based member benefit. So we look at every product you provided your members, look at their credit score. We bought over 20 years of data from TransUnion, and we benchmark the interest rate you gave that person during that period based on their credit score against the average rate that the average bank would have provided that product to someone with that credit score, and then back into how much more money a year that person has in their pocket at the end of the year because that they work with you within any community. So if you're doing community development, advocacy, trying to raise public deposits, you can communicate to whoever's representing that community what you have done for their constituency. Yeah, it's powerful analytics there. Yeah.
Thank you.
One other thing
Yeah,
I'll add,
go
because
ahead,
we
Sam.
talked a lot about the consumer eligibility piece, but we've also made software that automates everything with adding groups. And one of the things that I've probably it's recency bias, but a lot of credit unions are confused about what qualifies as a service facility for adding groups. So if you are multiple common bond and you ever run into issues with adding groups, let us know. If you're part of Co-op or Allpoint, you can add groups in most markets. So yeah, we've made a tool that basically automates the creation of a 4015 document and fills it out correctly, calculates the distance, all those things. So yeah, that can be helpful for adding groups too.
Awesome. Wonderful. Well, we've shared a lot of information today. So if any of this you'd like to explore further, please click that meeting link, or you can write it down from the slide. Probably easier to click the meeting link. But again, if you're going to be at GAC, meet up with us. Those impact reports that we can create don't just have to be used at GAC if you're not attending. Anytime you hike your hill locally too. So we'll be around for that. But definitely, if you're going to be at GAC, these are super helpful. This is what legislators want to hear. So reach out to us, please. We'd love to help you with that. Unless there's anything else from Sam, Chris, or Emily, I will be sending off these slides and the recording to anybody who registered. So if somebody did not make it today, let them know that we will be sending that off no later than tomorrow. But otherwise, I hope you have a great rest of your day, and thank you for joining us.
Thanks, everybody.
Thank you.